All right, what's going on, ladies, gentlemen, the beautiful people? It's me, it's your boy Ness. So you already know what time it is. It's money time for us to jump to that next level. All right, because how many of you are tired of taking a look at where you're at financially today? I know a lot of people are hurting, including me. Even right now, even after being a successful trader, a lot of times there are expenses that, come up out of nowhere, major expenses, and it could be lawyer fees. It could be all kinds of stuff. So, listen, life comes for us all. It's not what happens to us, but what we do with what happens to us. The winds of change, the winds of disaster, the winds of opportunity blows on us all. So it's not the setting of the wind, but it's the setting of the sail. Something that I've learned from Jim Rohn, okay? Basically, it is not the blowing of the wind that determines your destination. It is the set of the sail, all right? Not sales as in making money, but the set of the sail as in we're going to go in the boat, right? Life happens to us all. So this is why we have to be on point, because at the end of the day, investing, trading, racking up on assets is going to be your main allies to beat inflation. It's going to be one of your biggest allies to beat inflation. And so over the last previous lessons, we covered a lot of ground. Okay, we covered the basics of charting. Then we dove into contraction, expansion, fundamental analysis. Just yesterday, we went over drawing tools, which is located all over here on the left side of any chart that is powered by TradingView. Okay, which is most charts that are out there. All right. And so today we're going to cover some advanced drawing tools. But I want to be clear, what we're going to be covering today is Gann Fann. We're going to cover the Fibonacci tool, the generic Fibonacci tool, and we're going to cover Elliot waves as well. There are different denominations to some of these drawing tools, but for the sake of time and for the sake of simplicity, we're going to keep it simple. So we're going to cover these advanced drawing tools. Now, tomorrow, we're going to cover the drawing tools that's going to highlight candle patterns. And then we'll get into basic indicators and advanced indicators in the near future. But I want this to be quick and smooth because I do want you to retain this knowledge. So definitely take notes, especially when it comes to these advanced drawing tools. And ask your questions right here on the thread. I'm going to be adding a lot of these sessions that I do over to the guides, okay, on our Facebook group, which you can take a look at, in there. I'm also going to post this on YouTube as well. So you may be seeing this from a website. You may be seeing this on our Facebook Live. You may be seeing this through Zoom. You may be seeing this through other means. But for the most part, I want this to be simple and easy to understand, okay? So the first thing that I'm going to cover, because we did spend a good amount of time covering trends and things like that, all right? First thing we are going to go over is we're going to go over the Gann Fann, okay? We're going to go over the Gann Fann. And so right over here, I can see an uptrend, I can see a downtrend, a sharper downtrend, a sharper uptrend, an uptrend, okay? So we're going to be covering the Gann Fann, all right? And so the Gann Fann is a really good tool because remember that a trend line, whether it's an uptrend or a downtrend, it's basically like a supportive resistance line. And a lot of times what the market does, the market sometimes get out of that, all right? Get out of those, line markers and retests them on the opposite side. So a Gann Fann is actually going to show you multiple levels, very similar to a pitchfork. All right, and so let's cover that. Okay, we're gonna use the Gann Fann tool. All right, so let's start with this one over here. All right, here's an uptrend right over here that we can see. Okay. And what I'm going to do with this Gann Fann is the middle one, as you see over here, the 1-to-1 line is what I'm going to be lining it up with. All right, and let's see what makes the most sense. I'm thinking lining it up right over here. Okay. And what I'm going to do is I'm going to use the trend angle. I'm going to use the trend angle as an additional tool to work with the Gann Fann. And this is just to ensure that the trend is at least 45 degrees for a typical trend. Okay, here we go. Look at this right here. This is right around that range. Okay, so definitely a trend. The closer it is to 90, the sharper the trend is. But usually it's going to be 45 or higher. 45 for a typical trend. See, this is on the lower side. So I'm glad I lined it up with this side. So it's good to use the trend angle as a tool to go along with the Gann Fann. Okay, 49 degrees. Pretty solid, right? And so what we're going to see is, as you can see over here, for the most part, it's touching this 45-degree trend line. I mean, this 49-degree trend line over here, which is sharper trend. But then sometimes the market is going to test it on the opposite side. So it wicked over here, it wicked over here, it went over here, you know, just a little bit right on these sides. But look, okay, when you look at the 2-to-1 right here, all right, it wasn't even touching that support. Eventually it broke it, came out of it, came right back in. So the 2-to-1 area, the 2-to-1 zone is pretty significant. All right, it's pretty significant for sure. But when we're looking at this, we're looking at the potential points where the market could be touching and retesting at, okay? So breaks and retests from a trending perspective, you can see it right over here. Now look, when the trend gets out of the 1-to-1 zone, all right, and it comes right in between the 1-to-1 and 2-to-1 zone, all right, you can see that when it tries to come back, this was acting as a resistance at this point. And if we're looking closely, look how that kind of popped off, beginning of a downtrend. Right over here, multiple touches, right? That's what we're looking for. Bodies or wicks, that's what we're looking for. If we use the trend angle. All right, here is a 45-degree angle, but this one is pretty out there. It's more of a longer term. If we were on a higher time frame, like a 4-hour, you would see that there's a tighter angle here. But for the most part, you can visibly see that this is basically, remember what we were covering yesterday. Look at this. This is what we're looking at right now. Is a disjoint channel. Look at this, because it's a channel, but it's kind of like we could use the Gann Fann on this too. This downward, so okay, no. I'm going to have to use just another Gann Fann, right? But you could clearly see right over here where it would be retesting it got into this very powerful resistance point right over here, which we could represent it, okay, with a rectangle. Very powerful resistance zone right there. Okay, there are trends within trends. You're going to see it time and time again. Right? Now let's take the Gann Fann. Let's test it on the opposite side. Maybe we don't look, let's connect the bodies together. All right, from this point. Let's connect the same pieces together. Okay. Got to this powerful resistance, and as you can see, it started downtrending, and now with the bearish Gann Fann, you can see how it's kind of respecting these levels as well. So let me actually let me hide this for a second so we can just look at the bearish Gann Fann. So as you can see, we're following this, right? The middle 1-to-1 right over here. Look at that. Look how that 1-to-1 is acting as a solid, very solid resistance. And the 1-to-3 over here is acting as a solid support. 1-to-4 was acting as a support for a while. Sharper downtrend right over here. But for the overall downtrend, you can see that right here, the 1-to-3 is basically holding it down as a support in this channel. Because essentially that's what the Gann Fann is. It's kind of a trend channel in a way that is giving you multiple levels, multiple zones. But you can see how this thing is truly respecting it, even right here in the future. You can see it right there. All right, it's acting like one really good resistance, point, which is following that right there. So the Gann Fann, very amazing, useful tool. And we use it in combination with the trend angle, just to make sure it's 45 degrees or sharper. That's great when you're doing it from a downtrend perspective as well. Same sort of deal. So it's a great tool to basically look at trend lines, look at trends, and seeing where the trend may test. So if it's going to go outside of a typical trend line that you drew, then where else would it be touching? What levels would it most likely be touching? And are there opportunities there to take advantage of? And the answer is yes in this case, right? All right, so that's the Gann Fann in a nutshell. Okay, Gann Fann, something you should definitely, be using. All right, now we are going to cover next. I have it here in my notes. So Gann Fann, all right, we covered that. There are other denominations to the Gann family here. So if we look over here at the Gann, you also have the Gann box, okay, which we could go over, but this is basically a class within itself. Because there are some Fibonacci components to it. So I'll give you a quick glance at it. But let's say we're looking at this from the swing low, okay, to the swing high. We're connecting, wick to wick and whatnot, okay. Basically, you can take a look at this, all right, for yourself. Still kind of honoring these levels. Right, and usually the retracement point is the 618. The opposite of that, if we were looking at it from a downtrend perspective, would be 0.382, right? But this is meant to coordinate with time and price. All right, so you can see over here, according to the time, all right, the Fibonacci levels. Remember, horizontal is basically we're measuring time. vertically, we are measuring price. So you can see the Fibonacci levels on both time and price right here. Essentially, it is going to be telling on a couple of levels, because look, it hit the 382. It hit basically right in the mark, the 50 zone. Hit 618. It hit these levels literally right where this resistance is at. Right, if you take a look at this. All right, let me just put this red shade over here. All right, so if you take a look at this right over here, look, 382, all right, right at the halfway point, all right at the 50% mark, all right, 618, right over here. Look, it touched these levels perfectly, and they were reverse points each time. So that would have been, enormous trading opportunities for sales right here. Boom and boom. Look at that. And take a look at this. Right at the 382 point, right over here. This acted as a good support area. And then when it started to break, it acted as a temporary resistance. All right. So peep this. Another support again. Finally broke through, and it was the end of that. But you could see how when you are measuring with Fibonacci tools, and this is a Gann Fann, this is a Gann tool, this is a Gann box, you can see how this could be super effective. So I did say I was going to do a whole class on this, but I basically just did it. This is the Gann box right over here. It's a very useful tool. So I really wanted to cover Fibonacci before I got into the Gann box, because Fibonacci is where we, start to talk about these types of levels: 382, the 50 point, all right, 618 point, so on and so forth. But we just covered it. So let me hide this tool as well. All right, we're gonna hide this tool. Oops, yeah, I actually did that to the resistance point. That's fine. All right. Okay. All right, and so now what we're gonna do is we're gonna go over Fibonacci. All right, we're gonna go over the Fibonacci tool, the Fibonacci retracement tool. But what I'm gonna do is I'm actually going to use my chart to show you an illustration. Shout out to all my partners. Shout out to all my colleagues throughout the TradingView space. What I'm going to do is I'm going to be utilizing illustrations to explain to you how the Fibonacci retracement tool works, and then after that we will be covering Elliot waves. Matter of fact, I don't mean to bring you to and fro different places, but matter of fact, maybe we should cover Elliot waves first. Now we'll do Fibonacci retracement, because since we use the Gann box, it has some Fibonacci elements to it. So let's cover Fibonacci, okay? All right, so here we go. A comprehensive guide to Fibonacci retracements. We're just going to talk about, we're going to, have a little bit of talking points in regards to how the retracement portion of this works. Why is it the way it is, okay? First and foremost, I would recommend, searching up Fibonacci himself, math genius for the most part. But let's talk about some of these things, okay? So you can read along with me here, and I'll make sure I'll get, you can take a snapshot of this, because this is truly a learning experience, all right? So Fibonacci retracements, or Fibs for short. So if you ever hear me mention Fibs, I'm meaning the Fibonacci retracement tool, or Fibonacci levels, okay? So Fibonacci retracements, Fibs for short, are a set of ratios defined by mathematically important Fibonacci sequence. Look up Fibonacci sequence. I can have AI, kind of go over it real quick? Let's do that. Let's do that. All right, because I want to show you guys how you can look up certain things, okay? So Gemini is free. I do have ChatGPT 4. I have, AI tools and whatnot, but Gemini is something that everyone can access. But yeah, we could talk, we could ask it to give an explanation on Fibonacci sequence. Give me an explanation for the Fibonacci sequence. All right, so you can order the AI and it'll give you answers right in the spot. So unlike Google, where it's, just a bunch of websites and the internet could be a bathroom wall, people could write whatever it is they want. AI just basically kind of helps declutter a lot of the mess that we see on web browsers, right? But anyway, it reads, and I quote, "The Fibonacci sequence is a famous series of numbers where each number is the sum of two preceding ones. It starts with 0, 1, 1, 2, 3, 5, 8, 13, 21, 34. Here's a breakdown of some key points. Starting point. There are actually two common ways to begin the sequence. Some start with 0 and 1, while others start with 1 and 1. This difference only affects the initial numbers, but the overall pattern remains the same. Generating the sequence. After the first two numbers, each subsequent number is simply the sum of the two numbers before it. So, to get to the third number, 2, you add the first two numbers, 1 plus 1. Formula. While there's no single formula to directly calculate any number in the sequence, there are more advanced formulas that involve the golden ratio. Okay, you can see the symbol right here for the golden ratio, or pi, okay, to approximate specific Fibonacci numbers. The Fibonacci sequence is interesting for a few reasons, okay? The golden ratio, all right, remember we talked about 618 multiple times. The ratio between successive Fibonacci numbers approaches the golden ratio roughly 1.618 as the sequence goes on. Nature's patterns. The sequence appears surprisingly often in natural phenomena like spiral patterns in pine cones, flower petals, and seashells. Mathematical applications. Fibonacci numbers have applications in various areas of mathematics, computer science, and even finance. Yes, because once again, when we are trading in the markets, we humans, we are creatures of habit. Those habits form patterns in the market and it shows. And along with these patterns, guess what? The Fibonacci sequence reveals itself time and time again. I'm going to like this because I agree with this, okay? Sometimes AI could be, AI is incredibly powerful. Sometimes it may give you a little extra information. It may, even misunderstand your question, so you have to rate it. This is why they have the they have the rating system over here. Good response, bad response, whatever. But let's go right back to it. Now, when it comes to trading, all right, we'll say it again, okay? Fibonacci retracements, Fibs for short, are a set of ratios defined by mathematically important Fibonacci sequence. This allows traders to identify key levels of support and resistances for price action. Unlike other indicators, Fibonacci retracements are fixed, making them very easy to interpret. When combined with additional indicators, Fibs can be used to identify potential entry and exit points with high probability to trade on trending movements. So you definitely want to use the Fibonacci retracement tool, usually when it comes to trending situations, because you got to measure from the swing low to the swing high, wick to wick. Okay, remember that, wick to wick. So instead of bottom of a candle body to the top of a candle body, with a uptrend move or a downtrend move, it's wick to wick. Okay, now as you can see over here, retracements levels for a stock or for any trading asset, because we are trading Forex and we also trade crypto. When we do binary options, we're trading multiple market classes, which include stocks, Forex, crypto, all right, including commodities. Anyway, retracement levels for a trading asset are drawn based on the prior bearish or bullish movement. To plot the retracements, draw a trend line from the low to the high within a continuous price movement. Fibonacci retracement lines should be placed at 61.80%, 618, 38.20%, all right, as you can see, 382, all right, 0.382, and 23.60%, okay, 0.236, all right, of the height of the line. In bullish movement, the retracement line starts from the top of the movement, i.e. the 2360 line is the closest to the top of the movement, whereas in the bearish movement, the retracements are calculated from the bottom of the movement. Okay, so 23.6, the line is closest to the bottom of the movement when you look at it from the reverse side. Okay, all right, let's continue further. Whenever applying Fibonacci retracements, keep in mind that retracement lines represent potential support and resistance levels. They represent price levels at which to be alert rather than hard buy and sell signals. So just be aware that these levels are potential interest points, right, for traders. Do not take it as a hardcore, all right, guaranteed level, okay? Remember, trading involves risk, including some or all of your initial investment. There's no indicator that's 100% correct 100% of the time. There's no drawing tool that's 100% correct 100% of the time, all right? This is the markets, okay? This could give us a good prediction, but it's not guaranteed. Nothing is guaranteed when it comes to trading, okay? Because then trading wouldn't work. It's about calculated risk, right? Okay, so keep in mind that retracement lines represent potential support and resistance levels. They represent price levels at which to be alert rather than hard buy and sell signals. It is important to use additional indicators, in particular the MACD, all right, moving average convergence divergence indicator, to identify when support or resistance is actually being encountered and a reversal is likely. The more that additional indicators are pointing towards a reversal, the more likely one is to occur. Also, note that failed reversals, especially at the 382 line, okay, at the 38.20% line, and 50% retracement levels are common. All right, again, trading involves risk. All right, indicators are not 100% correct 100% of the time. Drawing tools are not 100% correct 100% of the time. But when you combine multiple indicators and drawing tools together, all right, then the probability becomes higher, but nothing is absolute. Nothing is guaranteed. If anything guarantees you profits, and there's no contract involved, it is a red flag in the world of trading, because trading is about calculated risk, okay? So look, swing low, swing high, 236, 382, 618, okay? And then you have one, all right? So 0% and 1, all right? It's full. Okay. Now, when you look at it from the bearish perspective, okay, from swing high to the swing low, all right, there we go. You have 618, 382, 236. Okay, you can see this. All right, it's very clear, very clear. So when we are putting it to practice, okay, let me remove all the drawing tools. Swing low to swing high, wick to wick. All right, we're going wick to wick. Swing low to swing high, wick to wick. Let me follow this. Follow these trends. And here is. There we go. All right, wick to wick, kind of following with this trend. All right, check it out. Remember, the point is to identify certain levels that may give us potential support, resistance, and even reversal points and possibly take profits and stop losses as well. Okay, so check it. If we're looking at this from the wick to wick perspective, okay, no, look at 382. Look at this right here. Acts as a really good support line. Okay, look at that. Very cool. All right, it was acting as a resistance a little bit before, but it was acting as a support line before it started to break. If we look at the 50 line, all right, this is the halfway point. All right, you could expect there's a lot of consolidation. All right, you look at the consolidation points. All right, look at 382 and 618. So between 382 and 618, all right, that's quite a consolidation box right there. Okay, when we look at these potential areas, all right, consolidate over here as well. This is the highest point. Now, on the way up or on the way down, what is most likely going to happen? What are some of the levels that are most likely going to trip off? This is what is showing us potential support and resistance points. And we can use this to identify, okay, potential opportunities in the market, okay? So check it, okay? The market came over here. It tested a 618, and then it dropped. This is a reversal point. So let's say we use the measure tool. Let's say we saw that it hit the 618 point, and we decided, you know what? Let's take a short-term sell on this. All right, from this point to this point, right, where it had a little bit of support, or we could use 382 exactly. All right, remember, we are on a 1 hour chart. So when we're looking at this, what we are looking at is 68 pips right there that could have been profited. Okay, so it hit this level fairly quick, because if we're looking at this, 68 pips right over here. 68 pips, that's fire. Okay, so a standard lot, $680. 2 standard lots, you could continue to do the math. All right, 10 standard lots, you can do the math, okay? All right, so that would have been a great in and out situation, but let's say you missed that, right? Could you potentially get in the trade again? Well, notice that 382 is now acting as a support. Okay, so it's testing as a support. All right, where's the next time can I get in? Man, I might just take a buy right over here. Boom. Okay, set the buy at 382. Okay, set the take profit right at the 618 point. Look at this. That would have been, you would have banked another 66 pips. All right, almost 70 pips right there. Could have banked it, right? And if you wanted to continue further, forget it. From 618 to the 1 mark, all right, it's 177 pips right there. All right, but let's say you missed that buy move, right? And you were literally just using these levels to see what could have occurred. Let's say you entered that buy level again. Could have hit it, buy, hit it, buy, hit it. All right, here everything was reversing. Okay, it was most likely going to retest this and go down. Or let's just say this time using 618 as your sell point, because the trend is now reversing. Obviously, you see it. The trend is now reversing. From this point to this point, all right, that's 109 pips. All right, there we go. That would have been a good catch, 147 pips right there. That would have been a good catch. But look, this continued. Look, this continued. 618 continued to be a great reversal point. And look at this, right? Now, let's take this out of the way and let us use the Fibonacci retracement tool going the other way. All right. All right, looking at this right here. All right, look at that. Look at these levels and how it's like revealing. 382, 236 acting as a hard resistance. 382 as well. The 50 point, you would have gotten several sells right here. Would have smashed it. Would have absolutely smashed it. So the Fibonacci retracement tool is pretty cool. And you can also get into the settings of it, and you could check the boxes that you don't want. You can even color it the way you want. So what I did was I colored the lines all white, and I just made the 618, the golden ratio. I made it gold, right? And so you can do that as well. Edit it the way you want, and then you can save. You can save it. You can save it. All right, save as. All right, so you can, keep that setting there whenever you're drawing out your fibs. But really powerful stuff over here. Okay, so now we put the Fibonacci sequence into practice, and we could go and deep dive even more because look, there's more things involving Fibonacci. Okay, we have all the other ones: the trend-based fib extension, fib channel, fib time zone, fib resistance fan, trend-based fib time, fib circles, fib spiral, fib speed resistance arcs, fib webs, the fib pitch fan. All right, there's a lot to uncover with that, but as long as you got the Fibonacci retracement tool down pack, everything else is truly secondary. Right now, let us now go over Elliot waves. So we covered this. All right, take a snapshot of it one last time. We're going to cover Elliot waves next, okay? Now, what you're going to notice is a lot of this stuff is basically going to be working together, okay? All these different systems and tools are going to be working together, all right? Elliot waves, all right, work together with fibs, and then combining it together with candlestick patterns. You can identify harmonic patterns, which is super advanced, and, we'll get into that in the near future. So we're going to go over candle patterns tomorrow, and then we'll get into harmonic patterns after candlestick patterns before we start heading into basic indicators, so on and so forth. There's really a lot to, uncover, but if you're willing to, rewatch, review, relearn, then this is going to be great for you. Okay, so the overall Elliot wave cycle is this. So this is a little easier than the Fibonacci and the Gann box, okay, because the Gann box have Fibonacci elements to it. But the idea of Elliot waves, okay, is that the market moves in pulses for the most part, okay? It moves in pulses for the most part, all right? And so this is the breakdown of it, okay? A typical Elliot wave cycle is this, okay? You have 1, 2, 3, 4, 5. Okay, this is the motive phase. All right, this is what it is. Okay, and ABC is the corrective phase. So phase 1 is numbered. Phase 2 is lettered. Rules: yes, there are rules. Wave 2 should never go below wave 1. Okay, it should never go below wave 1. All right, so we're looking at wave 1, the beginning of wave 1. This completes wave 1. Wave 2 should never go below, because then it just wouldn't be in the correct structure of the Elliot wave cycle. Okay, wave 3 is never the shortest wave. Okay, so going from 2 to 3, it's usually the biggest one. All right, 2 to 3 is usually the biggest one. Okay. Wave 4 never overlaps with wave 1. Okay, so wave 4 never overlaps with wave 1. So the levels that wave 1 touched, all right, wave 4 should be above that. This is a true motive phase for the Elliot wave cycle before the corrective phase begins. Okay, so the very first step, you can follow along with me here. The very first step is to look at the overall market cycle. The overall market cycle consists of only 8 waves, which is then divided into 2 phases. For simplicity, I will only be referring to the bull market variations, as the bear market is the same but in the opposite formation. So it's the same but reverse. Phase 1 consists of motive numbers, numbered, all right, as shown as shown above, labeled 1, 2, 3, 4, 5. Phase 2 consists of 3 corrective waves or different variations and are labeled as alphabet letters, A, B, C. Simply put, waves 1, 3, and 5 are directional primary trend movements. All right, so 1, 3, 5 are primary trend movements, directional primary trend movements. They're separated by waves 2 and 4, which are counter trend lines, which is corrective waves, okay? All right, the compounding structure of it, let's break this down. Okay, the compounding structure is as such when we look at it from, a major standpoint over here, okay? 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. All right. And when you're looking at it from the opposite side, all right, the bearish side, bearish Elliott waves, okay, 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. The most important basic structure, you can follow along with me right over here. The most important basic structure is making sure that you understand how time frames and cycles are intertwined. If you look at the chart above, you can see that wave 1 and 2, but on larger scale, has more details. 1 5-wave structure is a single entity of a 5-waved pattern of a larger degree. It can also be subdivided into a 5-wave pattern in a smaller degree. Confusing, right? Memorize this, okay? So keep in mind all this stuff. The larger wave 1 can also be subdivided into ABC. Wave 2 is then considered as a corrective, as a corrective on a primary scale. Its wave A and C are considered motive waves as they point to the overall trend direction of a correction. A 3-wave movement is considered a correction of a 5-wave pattern 1 degree higher. Waves 1, 2, 3, 4, 5 can also be subdivided into smaller versions of themselves. So the market consists of Elliott waves within Elliott waves within Elliott waves. Another useful tip is that it is not useful for everyday application to go too deep within a time frame perspective. A 5-wave motive pattern can usually be seen clearly on the 1 hour, 4 hour, and the daily time frames, which is the best to use Elliott waves. Remember, the higher the time frames, the stronger the confirmations. You don't want to go too crazy, because if you identify this on a 1 minute chart, forget it. You're going to drive yourself nuts. The whole point of Elliott waves is to look for the best entries and making sure whether we are in a continuation, as Elliott waves can give you a good position for an upcoming momentum swing. Excuse the misspelling. I know it drives me crazy sometimes when I re-go over stuff. Excuse the misspells, okay, on this, the misspelling on this. But for the most part, the market moves within Elliott waves. So tomorrow, we're going to go over candlestick patterns, and then we'll get into harmonic patterns. You're going to see how Fibonacci, Elliott waves, it all has a role in all this. It is all interconnected. And the more you're in the know of this stuff, the more you know to look for other things besides just support and resistance levels. There are traders that can be absolutely profitable with just the basic SRTs, support, resistance, trend lines, right? And just knowing where to place, stop losses and take profits, utilizing the long and short position tools. But once you can, learn a little more deeper and start to utilize other tools to help you out, the more profitable you can be. Because the average retail trader is just using support and resistance and trend lines for every little thing. So it makes them vulnerable to get stop punted by institutional traders. But when you are a little bit more advanced, you can kind of, slip within the scope of what institutions don't see. Okay? Remember, it's about volume. All right? Where all retail traders is one big game of tug of war. Forex is a decentralized market. Crypto's a decentralized market. All right. And you got to take a lot of this stuff into account. So definitely rewatch, review, and relearn some of the things that we covered in here We will be covering candlestick patterns and basic indicators tomorrow. So I hope you got value out of this. Please don't forget to share. Share, tag people on the post in this group. Share this if you're watching this on YouTube. If you're watching this on one of my sites, just share it. Share the information, all right? Because there's a lot of powerful stuff people must be learning about. And with that said, ladies and gentlemen, stay blessed, take care. I'll see you on the next lesson. Peace.